results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
The Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off, sessions low, still down about 1% on the day for a little more than 4 pennies.
Welcome, I'm Mike Bellafiore, live from the SMB Training classroom, developing your trading confidence. Our goals for this presentation are to define a confident trader, to share what the market has taught me, to discuss what does work, what doesn't work, dispel some myths, focus on what is truly important in your journey to become a consistently profitable trader, and help you improve as a trader. What does it mean to be a confident trader? How can you be somebody who gets to trade on Wall Street, who can become a pro trader? How do you become somebody like Steve Spencer, my trading partner at SMB, seen here on Bloomberg TV with those beautiful colors, talking about high frequency trading? Or Jim Rogers. How do you become as confident as Jim Rogers, who gave a really great talk in Singapore recently about his overall worldview and the way that he attacks the markets with his investment theses. So, a definition of confidence. I love Dr. Andrew Menaker's definition of confidence, and he sat in our training room within the last year, and I made a note of this. It's in one of my notebooks somewhere in my office. We're fortunate that lots of really great people stopped by in New York City to talk to some of our guys during the midday or after the close, and Dr. Menaker did recently. And he gave his definition of confidence. And he said, confidence is your ability to be resilient in the face of challenges, as opposed to what most people think of confidence, which is those uber confident people who go on television and with absolute certainty predict where a stock or the market is going. That is not confidence. So I received an email recently, and the email went something like this: my confidence is at an all-time low. I consistently throw away money every day and try my best to get into plays that we've learned. It seems every time I make attempts to get in above key resistance levels, like HID yesterday at 20, and I spend money getting shaken out before I tell myself to quit that stock and give up, and then these stocks seem to always make up legs after I give up. I get so excited every night to start the day fresh and look for stocks I think will make great plays, and then every day at around lunch I'm sitting here in the red thinking how terrified I am to make my next worst trade. And it's not like it isn't clicking in my head, I'm just executing like a moron. My P&L tells me I'm horrible every day. It's embarrassing. I'm going to get it. It's just a matter of time, I suppose. I guess I'm also comparing myself to other people in my class, and when they make money on a trade, for instance in AIG, I jump in, and the outcomes are not hard to figure out. I've stopped doing that, at least for the last week, because I don't think a stock like that improves my tape reading skills. But my approach of attempting to read the tape and playing these breakouts seems to be slapping me in the face, and I'm learning expensive lessons. I guess my question is to you, what is your attribute when you're trading well or poorly? Are you a zombie, or do you trade like you're the smartest person alive? Confidence, for me personally, is what has made me succeed. And this is tough to swallow. I hate being wrong, which I've been for most of the days here. Then I get pissed off and I try to prove to myself I'm not that bad and rip up more money. Anyway, I know I'm making poor decisions and I'm trying my best to get better. Any words of wisdom? So I bet there's people watching this video who feel like this trader. And look, trading takes some time to get good at, and I talked about in the playbook that there is a path to being a consistently profitable trader. And it starts with losing money. The first step on the way to being a consistently profitable trader is losing money. And the next step is losing less money. And the next step after that is being flat for the month. And the next step after that is making a little bit. The next step after that is adding to your playbook. The next step after that is being big in the plays that make the most sense to you, your A+ trades, from that base of consistently profitable that you've obtained, okay? But look, one of the things that I see from having trained lots and lots of traders is that most of the people that get into this are confident in other things in their lives. And they've never really failed at anything that was important to them. And then they start trading and they're incredibly ambitious and they're passionate about trading. This is something they really, really want. And all the other things they've done in their lives, they were good at. And they're sitting there trading, and even on a good day, they're wrong a lot. You know, on a bad day, they're wrong more. And this game of trading for almost all of us is difficult because we're not wired to be traders. I mean, who's wired to be wrong that much during every given day? And who of us are wired to be wrong that much and then be able to move forward and make the next good risk-reward setup without thinking this next good risk-reward setup isn't going to be a loser as well? And so, you know, I think a couple of things. One, it does take some time and you want to be patient. Two, you got to sort of understand the path to being profitable. And three, you got to recognize that, you know, this is going to be something that it's okay at the beginning not to be good at. This is the worst you're going to be as a trader. You will get better. As you develop your playbook, you will get better. The lion and the trader. So, one of the great things about electronic trading right now is that the markets are open to all of us. The problem is that while the markets, I mean, there's a very low entry to being a trader, right? I mean, you go to a broker, you give them some money, and you start hitting some keys, and you can trade. And you know, the analogy I sort of use is being able to play for the New York Yankees, being able to play center field for the New York Yankees. I'm sure lots of us grew up and wanted to play center field. I wanted to pitch for the New York Yankees, but a lot of people grow up and they want to play center field for the New York Yankees. And boy, that's probably never going to happen to most people, that they actually get to step onto the field of Yankee Stadium and play Major League Baseball. But trading is so unique to all of these pro things that many of us grow up wishing that we could do, in that you can actually step on the field in the trading world, and you can step onto Yankee Stadium in the trading world and play. You can go to E-Trade, you can throw down some money, and you can trade with the other pro traders. You can trade with Paul Tudor Jones. You can trade with John Paulson. You can do exactly what he does. But you can't mistake the fact that you have entry to it, that there's a low barrier to entry to it, to that you can do it, or that you are a pro. And trading really is an exclusive country club for people who become consistently profitable. And you sort of got to understand that, yeah, there's lots of people out there that definitely can do it. They definitely can do it. But you got to understand you're playing a pro game. You're playing pro. And to do it, that means you got to have the skill where you do have an edge, which we're going to talk about in a little bit. So can you make it as a retail trader? Of course you can. Of course you can. You would be surprised. You'd be surprised how many good traders there are out there who make pretty good money trading part-time, trading full-time, trading as retail traders. It's harder than when I started for lots of reasons. Technology, HFTs, the markets. It's definitely harder. But there's also better technology that you can tap into. There's great education you can tap into. There's social media, trading networks you can tap into, like StockTwits. And from anywhere. I mean, this gentleman is from Bulgaria. Our blog gets read by over 100 countries on a daily basis. You know, you can get really good education from anywhere. You can come and take our SMB DNA program from anywhere in the world. And so, but the thing is that you got to be a pro about it. Yes, you've got access. Yes, you've got access to be able to play on the field at Yankee Stadium. Yes, you've got access like people on the floor of the New York Exchange have, but you got to have the education for it, you got to have the technology for it, and you've got to understand your edge in the marketplace. All right, find the plays that work for you. And this was really the thesis of the playbook. I think a lot of people think that they can sit next to a really great trader. We've tried this before. We've taken some of our traders who made 250 plus, and we sat them next to seven-figure traders, and those 250 plus traders thought they were going to become seven-figure traders, and what happened? The traders got worse. And the reason why they got worse is that they weren't that seven-figure trader. They didn't have the drawdowns that those traders actually had. They didn't understand the plays these traders were making. Okay? They didn't have access to capital like these traders had. They didn't have the experience these traders had. We're all different. We're all different. And so what you want to do is sort of understand the setups that work for your personality. And Van Tharp does a really good job of talking about this in some of his writing. You want to understand your personality. You want to understand what works best for you. And then you want to trade those trades more often. You want to trade them bigger. You want to have technology that finds more of those opportunities. You want to build from your strengths. Or as we say, you want to be bionic. All right, identify trades that don't work for you. So at SMB, we have a tool we call the SMB U Performance Center. And we do a lot of number crunching. And guys can see what's not working for them, which stocks they don't trade well, what times of the day they don't trade well. We have all of this data. You know, for instance, we had a gentleman who was an experienced trader with us who we recently had to let go. And the trader was a seven-figure trader for many, many years in the past. And his thesis for way too long has been the market is going to go down. And so we took his trading stats, we crunched them, and we said, look, if you look at your trading stats, there's something very, very clear. The shorts that you're holding over 2 hours are not working. The shorts that you're taking out overnight when you're not in the money in them are not working. But the shorts where you're holding for under 30 minutes, you're trading very, very well. And the shorts you're holding actually under 5 minutes, you're trading exceptionally well. And why don't you then adjust your trading and spend more time on the shorter term shorts? And the trader said, yes, fine, sure, you know, whatever. And at 3:59, you would see the trader in his losing long-term positions, his losing long-term shorts, bang out of them like he said he would. But then guess what happened at 9:30? He would just come in and short those same losing positions. And so he was subverting the whole process that we had discussed. And he kept losing money, losing money, losing money. And it was pretty clear why he was losing money, which is his thesis was wrong. And only a very small select parts of his shorts were working, and he needed to get rid of everything else. If he did, he would be still trading with us. You got to be doing that. So Pippin is a really good example on our desk of somebody who understands what he trades the best. I had a conversation with Pippin from the playbook recently, one of the most polite traders I've ever trained, and he came in and he said, you know, Mike, I really trade OTC stocks really well, over-the-counter stocks really well, and I'm a really good scalper, and I'm a really good momentum trader, and I'm getting away from that a little bit. He was sort of making longer-term options plays that kind of weren't in his zone. And you know, he's like, I really got to focus on this, I got to focus on this. And you know, he'd always been a very consistently profitable trader, had always done fine. But when he sort of veered off of what he was doing well, understood that wasn't working for him, came back and put more of an emphasis on the trades that did, he saw some pretty good success. I think last month he made over $40,000. And again, a developing trader. This is somebody who hasn't even been trading for 3 years. Trades you didn't make. So if you do not make a trade, but you think that it's something that would work for you, it's perfectly okay to archive that trade in a playbook form and then add that to your trading quiver. Remember, your brain doesn't make the distinction between doing something in real time and visualize yourself doing something. Watch trading video. So recently in this room, we watched a playback of Twitter, the IPO on Twitter, and some of the guys who didn't actually make the opening drive, set up play, buying the opening print play, support play. There were a couple of different plays they could have all made in Twitter. They watched the tape. Memo had actually taped it, and we watched it back a bunch of different times. And the guys who didn't make it, they could sit there and they could then, for themselves, determine if there were plays that they could add to their quiver. Talk to others. So look, there's no excuse for you not to be talking to a lot of different people through social media. There's no reason, even if you are trading at home, that you do not have a network of people who you are exchanging ideas off of. And I wrote about this in one of my books, something that Barry Ritholtz, probably one of the most famous bloggers today, runs an investment firm with a reform broker who's one of the new financial media stars. And Barry Ritholtz said that people in the trading community are very generous. If you reach out to people, they will tend to write back to you. And there's no reason why you can't develop a network of people who you're bouncing ideas off of. You should all be in a chat room. Whatever that is. We have SMB Real Time. There are really great chat rooms out there that will give you ideas. We have SMB AM Meeting, another idea generator. We built these tools because no matter where you are, people really do need access to more ideas of the trades that make sense to them so that they can make more money. One idea pays for these chat rooms for 3 years. Develop your trading skills. Constantly thinking about developing your trading skills. Get better at technical analysis, get faster on the keyboards, get better at tape reading, get better at evaluating intraday news. So yesterday, during our meeting, we talked about GoGo and Cruise and how they both had patterns that tended to see a stock close at the bottom or close at the top intraday. GoGo had news that was so good that stock with that news pattern tends to close at the high of the day. And Cruise had news that was so bad that it tends to close at the bottom of the day. But you got to develop your intraday news skills to understand what those patterns are. Negativity. Very quickly, I will say, get rid of it. Shark very recently had a private chat with me about somebody who we had assigned to him to mentor. He said, I don't want to mentor that guy. He's too negative. I don't want him to be around him. Recently, there was some jackass who came into our chat room, and I banned him. I called him up on the phone, and he was so shocked. He's like, why was I banned? And the guy went in there, started writing nonsense about the chat room. And he was like, that's a terrible idea. And we called him up and we said, okay, fine, but you're banned from our chat room. And not because we don't accept other points of views, but because that point of view was not helpful. All right, get rid of those. Just get rid of those people. Psychology. I think that a lot of traders do this, where After you actually develop a playbook of trades, after you understand how you make money, when one of those setups appears in the marketplace, I think a lot of traders take themselves out of good trades. They overvalue a loss from a former trade. And that's really the importance of actually doing the playbook exercises to understand the playbook trades that really do make the most sense to you, to have that in a hard copy. It sits on your desk. You got to have that, because really when you get to that point where you've done all that work, then when you see that setup, you just say to yourself, I'm just going to execute. That's just my job, whether I'm right, whether I'm wrong. Today I made a huge, huge short trade in Cruise that 3/4 of it I just got stopped out of. I just checked. I'm only on 1/4 of it. It was a good trade. I made a good trade. I can't control whether or not the stock's going to go up or down. That's not my job. My job is to put on good risk-reward trades. We made a huge trade to the short side of this HOLX today. We got stopped out of all of it after being well in the money in it. I can't control whether or not it's going to follow through for the rest of the day. All I can do is put on risk when I should put on risk. That's my job. I did that, okay? The market doesn't care that I wrote 2 books and I started a firm. It doesn't care. The market doesn't care who I am. But if you see a trade where there's a good risk-reward opportunity, you can't take yourself out of it. You got to just pull the trigger. Ripping through charts. If you're doing this, this is actually going to give you more confidence because you are better prepared mentally to make the trade. One of the things you should be doing as you're ripping through charts is say, if the stock gets to this price, if Facebook gets to 45, I'm buying. That's one of the charts I've ripped through recently. If it gets there, I'm buying. Recently, I said to myself, the DDD gets to 50, I'm buying. It's $75 today. You know, if Tesla gets above $92.25, I'm buying. That's a great 3-day growth trade I made 2 hours before the birth of my first son, Lukey, that I talk about in SMB Foundation in our training program. John Wooden, one of the great coaches at UCLA, one of the legendary college basketball coaches, has written, failing to prepare is preparing to fail. When you're ripping through charts, you're mentally preparing to make excellent risk-reward trades. That breeds more confidence. Confidence comes from having many trades in your quiver. I have a lot of trades in my quiver. I know I can make back money when I'm negative. I know if I have a bad month, I can have a good month the next month. I don't worry about it. And that in turn allows me to get bigger. Me knowing I can make back money if I turn negative gives me the confidence to take on the risk when I see it. But I have that confidence because I've thought out the trades that are worth risk. I know when to put on 30% of my intraday risk. I know what trades those are. You are special if, and look, everybody's special out there. We're all special in some way. But I do meet too many people who think that they are special and that the market owes them something, and the market doesn't. And I found in this game that you're a special trader if you grind it out, you have a good mindset, you come in, you work hard to get better every day, you work on building your playbook, you do a detailed trade review and archive a playbook setup every day, you talk to other people about setups. It's the guys who you don't notice at the beginning, who are quietly doing their work, the guys who are making sure they're getting their reps in. There's a video that we talked about in this free training program, turning 1 day into 10. Those guys who are turning 1 day into 10, those guys that have a passion for intraday trading, this sport, as opposed to maybe longer term investing, those quiet guys doing that work, that had a lot of fanfare. Sometimes I don't even notice them for the first 6 months. 2 of the best traders that we've trained, didn't notice them for the first 6 months. Not that I ignored them. I can't tell you I thought they were going to be really great traders. And there's been plenty of guys who Spencer comes to my office and is like, that guy's going to be really great. And I just shoo him away because I just come back in 8 months. I just don't know. So talent melding with passion. You want to find something that you're passionate about, and you want to make sure that you have talent that melds with that passion. You want to be working at developing the trades that work for you. Be patient and search for those trades, developing your quiver. It's that passion that enables you to do the work, to build your playbook, to archive trades, to do detailed trade reviews, to think about trading, to watch video in a group, to be active during these sessions. That passion is that active passion is what's causing you to do the work necessary to become great. And it does take time to develop. I don't think people become great for at least 3 years. Michael Covell talked about with me on a podcast we did together recently the importance of deliberate practice, and this idea of purposeful practice is getting so much more publicity lately. David Brooks wrote about this. A mainstream New York Times op-ed columnist wrote about the science of performance that can very much help us all in different walks of life. Malcolm Gladwell is probably the most famous person in Outliers for talking about how we use the science of performance to become good at lots of different things. And look, I think some people think that trading is something too hard for them. You know, maybe they feel like they didn't grow up with the right parents. Maybe they feel like they didn't go to the right school. Maybe they feel like they, weren't born rich. That there's some exclusive club that is not for them. And I think that what I've seen over the years is that trading's a skill, and trading is there. The markets are open. The markets are open. We all have access to the markets. You can step on the field and play. You can step onto Yankee Stadium. You can step onto the Yankee Stadium of trading. It's open. It's open. You can do it. All right, but you've got to have 2 feet in the door, and you've got to do the work, and you've got to make adjustments. And there's nothing to get. You're never going to get to the point where you feel like you've mastered trading. It's like golf. There are very few incapable of becoming a successful trader, but there's a lot to do. There's a lot of patience and a lot of work to do before you get there. And one of the things that I hope people understand about trading is that there is a true reward. And the true reward is you understanding that if you can set your mind every day that you're passionate about. I wrote about this. There's a quote that finishes the playbook, and it's something that finishes all of my emails to lots of different people, and it really is the true reward of trading. Besides the money and besides the freedom that it would give you, which are great. There's a sentence that I hope you all hold in your head. The true reward of trading, which is you can be better tomorrow than you are today. If anyone has any questions, happy to answer them. Please go to our blog where we offer lots of free stuff on trading. Thanks for watching.